I've been a big advocate for backtesting, but in this video, we're gonna go over how backtesting can possibly destroy your trading and how it can lead to you having less confidence while trading. So when I first started trading, I was heavy into backtesting and I knew it was one of the best ways to practice because even if the market was closed, even if I wanted to backtest or practice 100 setups in one single day, I was able to do that using historical price information. Obviously, backtesting is powerful, but I had a pretty bad experience because I had a fundamental misunderstanding of how it worked. I was expecting the results from backtesting to closely be similar to how they would be if I actually traded that exact same way in the live markets. What I didn't realize was that there's certain factors that cause a huge difference. And that led to me having worse results during my backtest, which then led me to be discouraged, and I almost quit on trading because I was putting in so much practice, I was putting in so many hours, but the backtesting was not showing me the type of results that I wanted to see. So in this video, we're gonna go over why that happens and how to actually form an action plan so we can figure this out for you and we can help you become a profitable trader using backtesting, using forward testing, and using just the live markets alone as well. It's not a waste of time to backtest, but you have to understand that the results that you get while testing historically are not going to represent, it's not going to mirror perfectly what's going to happen in live trading. As a matter of fact, it's usually for the better. Usually in the live markets, depending on your strategy, if it's anything similar to mine, in the live markets, you'll actually perform better. You'll have better results when you're trading for real than when you're testing. There's a couple of reasons for this, but it's super important that you understand this and you don't go through what I went through, which was months and months of me thinking that I did not have an edge. But for some reason, when I would go on the markets, I actually realized, hey, look, I'm predicting the markets consistently. I do have an edge. But for some reason, when I go test it and I go get the data from my practice trading, it's not showing me the type of results I want to see. For example, I would get sometimes at a 1-to-1 risk to reward, I would get like a 55% win rate, 58% win rate, sometimes 60% win rate. And this was after hundreds of trades. I didn't understand what was happening because that's obviously not profitable enough for me to go with confidence into the markets. So I was super unconfident. I was super discouraged. I spent hundreds of hours trying to develop an edge in my backtesting, but it just wasn't representing the same way I wanted it to. But the only reason why I stayed motivated was because I was still predicting the markets when it came time to the real live markets. So the thing is that backtesting can be super frustrating if you're just looking at the results themselves and then you think your strategy isn't profitable. Your strategy may actually be very profitable in the live markets. That's the main thing I want you guys to get from this point right here. So don't let it become frustrating. I would get so mad when I would spend my time to take 100 trades and I didn't have an edge. And then I would improve the strategy. It still didn't have an edge, or it didn't have as much of a profitability factor that I wanted it to. But it could just mean that it's one of those strategies that performs better in the real markets, like mine. See, the thing is that there's factors that we cannot see during the backtest. And as much as we may want to treat the backtest the exact same way as we do when we're actually trading, we're just unable to. There's certain things, like even when it comes to news events, we're not able to go back and check every single news event while we're backtesting. And even if we do, we still have that bias of knowing more or less where the market went. The reasons are because one, you have more context, so you know better about what's happening that specific week. Let's say right now I go to a random week 2 years ago. Let's say it's April. I have no idea what's happening there. I could look at the price action, but I haven't felt the price action personally, so I don't know how the markets have been performing in the past couple of weeks. We all know that there's some months that are more volatile than others. There are some seasons out of the year that are more volatile. Sometimes these are cycles that repeat every single year, but sometimes, depending on what's happening in the world and just how the markets are moving in general, there will be some weeks and some months that are more trending than others. And not all of this can be seen in price action. Some of this has to be seen with price action plus time. And the time perception, another big reason why you may get better results in real trading, is because of the time perception. It's a lot more accurate when you're actually sitting down and watching those candles form in real time. Compared to when you're testing an historical price, you can just skip forward very quickly. You can skip forward a day, a week, a month, even a year within a couple of hours or a couple of minutes if you just skip forward. You can't do that in the real life markets. And the thing is that when you do that, when you're testing, now you go into a new environment that you're not used to. We don't know how the environment was in April of 2 years ago. We just don't know. And trying to pretend that it's the same is just going to lead to frustration. It's not the same thing. And I learned this the hard way after months of getting frustrated. I didn't learn how to use backtesting the right way. There's a way to use backtesting that actually leads to profitability, and it helps improve your edge. It helps improve your trading strategy without having to rely on the data that you get based off a theoretical equity line, right? So if you're backtesting and you're pretending that you had a capital and then at the end of the 100 trades, you want to see how much you made, that's not the right way to do it. But I am going to share with you in this video how to use it to become more profitable. What should you do? I want to help you create some type of action plan so you guys can use testing and you guys can use these tools and these practices to actually make your trading better and to increase the amount of profits you're making every single month. First of all, if this sounds like something that you have experienced, if you've been frustrated at the results themselves that you've gotten from backtesting, then you should mostly test your strategy in the real markets. There's obviously a reason for your poor results. And unless you're brand new to the markets and you don't know what you're doing, chances are you have a pretty good idea of how the market moves, but it has to be applied to the live markets. Second of all, you don't have to put real money behind every setup when you are testing. But what you can do is you can forward test. Forward test is very simple. It's like back testing in real time. You're testing, so you're not actually entering positions and exiting out of positions, but you're pretending to, and that's how you build confidence. Because if I say I'm going to place a fake buy here on Euro USD with my stop loss, my take profit, and then I see if it worked out or not, I can write that down. Over time, we start to see how often are they playing out, how often are they not playing out. So here's the action plan that we're going to follow to use testing, both back testing, forward testing, and actual live testing with real trades with risk behind them to become a more profitable trader. Okay, so there's three main things. The first one we're going to be talking about is forward testing. This is what builds your confidence, right? If you're a brand new trader and you're still unsure about actually risking money behind these trades, you're literally brand new and you don't want to lose money, then just forward test it for 4 weeks. But if you do have some experience, like a lot of us watching this video right now, we have experience, test it while still taking real trades. Like you could still put real money behind it. You're testing. But what I will want you to do is limit yourself to 1 to 2 trades a week. This is going to maximize the learning ability. The more trades you take, the harder it is to study each single one individually, and the harder it is to learn from these trades. Take a couple of trades a week, 1 to 2, journal each single one, why you took it, what was the result, and screenshots of multiple timeframes of the trade. That's the main information that you need to write down, and that's how we're going to build confidence, right? So depending on what stage you're at, if you're brand new, you don't have to risk money. But if you have some experience and you feel confident risking your money, you've already gotten past that first step, then test it with some real trades. And you can also do some forward testing where you don't enter in, you just test it. It's a theoretical trade and that helps you predict more and more confidently. Now, the second thing is scaling. So we want proof of consistency. So we're going to keep forward testing the strategy until you get 1 whole month in profit. Because if you can't get at least 4 weeks straight, where at the end of the 4 weeks, I'm not saying every week has to be profitable. I'm saying by the end of the 4-week period, so 30 days, in that period of time you made money. Once you have that, 1 to 2 trades a week, then we can start to scale up. We can risk more for our trades. Doesn't mean we have to actually take more trades. The way to make more money is not by taking more trades. The way to make more money is by risking more on each individual trade. Once you reach this point, now you can scale up the risk. Now, the last main pillar is backtesting, right? So we're still going to do backtesting. I still use backtesting to this day, less than I used to, but I still use it every day. I use it less frequently now than I used to, but I'm still using it to spot patterns because I want to know how often certain things play out. So after this, I'm going to get on the chart and show you how I would use it to this day, even if it's not necessarily to see how profitable my strategy is. I still recommend you to backtest, but instead of using it as a direct indicator of how your strategy is accurate, we're going to use it to see how often certain patterns play out. All right, so let's get on the chart here. So let's find a random pair. Let's say we're on CHF JPY, and let's say we're testing on the daily. I see this nice clear bullish trend. So let's say we are backtesting, and let's say I go back in time. The way that I'm going to use backtesting is that I want to see certain patterns. Now stick with me here. What I'm talking about is instead of using this as like pretending that it's a real live market, I just want to get data on how often certain things play out. We're going to do a mock idea here. Like it's not a real idea, but it's just something to see. Let's see how often when we have an engulfing bullish candle above the 50 EMA on the daily time frame. I picked this because this is what I see right here. How often are we going to continue in an upwards direction, right? So that's what we're going to be testing for. And I'll show you a quick example of how I would do that. So let's say right here, this is the first one. So I'll just put here number 1. And then we see what's our criteria. So our criteria is that the market pushes up at least 200 pips since we are on the daily time frame after an engulfing candle. And the criteria for it to fail is that it breaks the low of that engulfing candle. So let's test it here for the first one. Obviously, we know this one is gonna play out. Actually, it almost got stopped out there as you saw, but it did continue 200 pips to the upside. This is how you test it, right? So let's go again. Let's wait for the next bullish engulfing or 200 points to the upside and see if it gets hit. Remember, this is not an actual strategy. This is just showing you the idea behind how I use backtesting. Boom, so we hit it. Right? So then I'll mark my number. I'll put number 2. And I hope this kind of makes sense. What I'm doing here is I'm seeing, for example, one of the things that I used to test a lot when I was first starting out was that I would see how often, if the London session is bullish, how often will the New York session also be bullish or be bearish and reverse the move from London session. This is something that I tested myself hundreds of times. And I learned that using this little strategy right here that I'm showing you. Let's go again, right? So we're waiting for the next bullish engulfing. Technically it's this one, right? So we're gonna look to see if this can go 200 points higher without breaking the low, which hasn't broken the low yet because it was such a big candle. And eventually, yes, it did. So, I mean, this is just a way to test it, right? Obviously I could write down like, hey, look, we had massive drawdown, so this wouldn't have counted. This would have been maybe a loss, but then I'll get the number. I'll put it over here. I'll put number 3. We could even add an extra criteria where it's like, okay, bullish candle, but it needs to hit the 200 points within 5 candles. Realize what we're doing here. We're gathering data. And this is only a couple of minutes. Imagine doing this for a longer period of time on different time frames. We start to learn how the market moves. We start to get an idea of what's happening. Now, real quick, that's how I do backtesting. I hope you guys understand this, but this is the overview of how you would use backtesting and how I still use it to this day, even without having to test the strategy directly. Now, I also want to show you how I would go about forward testing a strategy. Obviously, at this point, I'm already very confident in the way that I trade, but I've also been trading for 5 years. So I have that experience. I know what works. I know what doesn't work. But if you guys are brand new to the markets, you still are kind of getting confident with your method of trading. You still want to get a better understanding of how it works. So you may want to do some forward testing. Forward testing, let's say we're right now, it's Saturday. I'm looking at this market and let's say I see a nice opportunity to sell right here. I'm going to place my stop loss here. Now on Monday, when the market opens up, we're going to get a result. It's either going to hit stop loss or the market is going to go down and hit my take profit. When you have this result, what you want to do is you want to take a screenshot of this trade, right? So you can go up here, download the image, putting them in the journal. It could be a written journal, but then you can't have the screenshot. So Google Sheets, then you could have the file in your computer, you link it, whatever. I have a whole template for that if you guys are interested. You basically journal it as if it was a real trade, but you put on the side, this was a forward testing trade. You wait a couple of weeks, you keep doing this, and that's how you build confidence. You get the same learning experience from this as you would if you were actually trading. So I think you guys get the idea. That's how I view backtesting. That's how backtesting can potentially hurt your trading to the point where it almost made me give up on trading. I thought I was doing something wrong. I thought trading wasn't for me, and I thought I did not have an edge in the markets. But thankfully, I realized that when it came to the real markets, I had an edge. It was only when I was backtesting that I wasn't getting the results that I wanted to see. Huge difference. I've never heard someone talking about this, and it literally caused me a lot of frustration. I hope this video helped you guys out. Let me know in the comments below what you want to see next, and I will see you in the next one.